Apartment listings soar. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. I'm still working through my stein of coffee, and I thought we'd have a look at this article from the Fin Review regarding apartment listings soaring as investors offload. Now, earlier today we looked at another piece about, developers getting so desperate they're discounting and dressing it up as paying off your mortgage for a year. Smart marketing, brilliant marketing. I'm quite impressed, but that doesn't scream confidence. That does not scream confidence at all. Now, before we go through this article, let's just jump over here. And I brought up the Property Council of Australia, their data room, and we can look at median residential unit values just to get a bit of understanding. Now, this data is from the 31st of March this year. Now, Sydney, they're the highest at $700,000. The weighted average is at $575,000. Then we have Melbourne. Sorry, nope, they're at $575. There's a $493 difference. Okay, wow, that's so big. Canberra, $438,000. Hobart, $395. Brisbane is below at $390. It just shows you, I'm always surprised when I see Hobart as higher than Brisbane because of my experience working for a Tasmanian company, visiting Lonnie and Hobart as a student, and just getting very jealous of how cheap the housing was down there. So now the poor guys down there, well, if they bought back then, they're doing well now, but people getting in there are paying a lot. Perth is at $370, then you've got Adelaide at $338, and Port Darwin down at $300,000. Now, the thing is, right now we're at the beginning of a recession. There's lots of discussion of getting into property, buying now. It's going to be good. Every article I'm looking at from domainrealestate.com with a positive spin on property, it feels like that they're just cherry picking. They're cherry picking the upper quartile of the sector. Such and such paid $500,000 above reserve for that property. And if we'll bring up this chart, guys, this is unit price growth. And the joke is that you've got the red rooster line in the western suburbs, and you've got goat cheese and, cold pressed coffee along the east coast. There's a social and class divide. And, the property price growth has aligned with that. Frankly, it's going to be the poorer, more affordable suburbs that feel the brunt of it. And you'd hope that a lot of those people are prepared. But apartment listings are soaring now as investors are offloading, apparently. This is before the JobKeeper supplement disappears. This is before the JobSeeker bonus disappears, before the JobKeeper support mechanisms disappear, before the mortgage holidays disappear, before the trading while insolvent waiver gets removed, before we technically enter actually 2 quarters of negative growth. Is this the smart money trying to get out now? Are they trying to jump ship now? Let's have a look. That could be what it is. Apartments for sale listings are surging across capital cities, led by Sydney with a 39% jump in new stock during the past 4 weeks, in a sign investors may be offloading properties in a weakening rental market. Remember a video I did recently where the RBA, in internal documentation, were proposing to essentially halt residential real estate transactions. They wanted to intervene in the market that much. I mean, that's their modus operandi. They're interventionists. And because they were afraid there would be a crash. Now we're starting to see more property hitting the market. Is this just because confidence is returning, or are people exiting? Domain data shows that between 4 weeks to May 17 and 4 weeks to June 14, apartment listings rose by 27% in Melbourne, were up 15% in Brisbane, and 37% in Perth. New apartment listings jumped 43% in Adelaide and were up by 4% in Canberra. Compared with a year ago, apartment listings in Sydney were up 8 percentage points, while Melbourne was higher by 2 percentage points. Domain senior research analyst Nicola Powell said the trend could be a sign investors are moving on. The shift seemed to be concentrated in Sydney at the moment. Perhaps we are starting to see some investors choosing to offload their property because of the disruptions to the rental market, Dr. Powell said. If landlords can't weather this pandemic storm, can't secure a tenant, and can't get that cash flow through this period, we could see an increase in apartments coming onto the market as investors try to sell up. Domain is majority owned by Nine, publisher of the Australian Financial Review. A surge in unemployment, which is what we're reading now, a surge in unemployment caused by the economic lockdown to slow the spread of the pandemic has put pressure on many renters, and travel restrictions have slashed migrant numbers and helped drive demand for properties. The contraction has also sent buyers out of the market. And, well, we also have the student numbers. International students have just plummeted. I was reading the other day where some of these student accommodation places to attract tenants had dropped rents from $400 a week down to $150 a week. And I don't care what you say, that's a huge jump. That's a huge jump. And the costs of these places, most of them, or the ones I know, the full service ones, they've got high body corporate fees. So all the listings are piling up. To make matters worse, the number of older apartment listings has also started to pile up, pushing inventory up to risky levels. An analysis by Select Residential Property head of research, Jeremy Shepherd, found the proportion of apartments that have been languishing on the market for more than 100 days jumped to 41.3% in the Sydney CBD during the past 3 months. On average, it takes 90 days to sell a property. So, just think about that at the moment, guys. This recession is just starting. It's just starting. Remember how a couple of months ago, pundits were saying, oh, property will be good. There isn't enough supply. There isn't enough supply. Maybe not for houses. Maybe people are going to sit in their houses. They're going to hold on to them. But there are 3 investment properties they have that are going down, that they risk losing 20-30%. Maybe they're like that genius who had negative geared 6 properties, one after the other, was hoping for a capital growth and was only paying interest only. What's going to happen? You'll get to a point where you're forced to sell. That's the thing. And remember, it's the edge cases in these markets that affect the prices. It'll be a snowball effect. Some people may just cut their losses. And then don't worry everyone. The RBA will intervene and just shut down the market because we're a free market here. Everyone, Australia's capitalist. Remember that. Apparently we are. In the Melbourne CBD, the volume of older apartment listings rose by 16.3%, taking the total of older stock to 307, while Adelaide rose by 40.3%. This could also be because it's just been a complete shutdown of the industry. So people getting their stock back online is creating these huge increases. Or it could be people who suspect what's going to happen and are trying to shift. SuburbTrends.com director Kent Lander said inventory in many apartment-dense suburbs such as Southbank in Melbourne had been building up as buyers pulled back. Mr. Lardner calculated Southbank had accumulated 11.8 months worth of apartment inventory, while Melbourne had 10.08 months worth of stock. A balanced market normally has 6 months worth of stock, where there is no downward or upward pressure on prices. So we're going to see a downward pressure on prices. And this is going to be felt in the apartments, in the investor-grade stock everywhere. I often see a price fall of around 1% for each month above 6-month level, he said. Wow, someone in property actually doing some decent analysis. For example, if the market has 10 months of inventory, I expect to see around 4% price falls on average each month until things come back into balance. So just think about that. The recession's just beginning, guys. This means Southbank could experience price drops of around 5% per month, and Melbourne CBD could fall by up to 4% per month until buyer volumes pick up and bring the inventory levels back to normal. Docklands inventory is currently sitting at 9.27 months, East Perth at 8.87, and Surfers Paradise at 8.2 months. So, oh boy. I couldn't think of a worse place to live, to be honest, Surfers Paradise. I just couldn't think of a worse place to live. Sydney has 7 months of inventory, while Perth is pretty much 7 as well. And sales volumes fall. But vendors could be waiting even longer to make a sale as fewer buyers are choosing apartments. That's not surprising. Just look at all of the issues in construction in apartments that have been going on around Australia. Don't be like that guy who takes the first homeowner grant to buy something off the plan. What's the point now? There's stock coming on. There's months of oversupply. You can pick and choose. It's a buyer's market. Why would you go off the plan? I don't understand. Can someone explain it to me, please? A CoreLogic analysis showed apartment sales dropped 37.7% in Sydney during the past 3 months to May, while Melbourne plunged 38.9%. Apartment sales in Brisbane were 19.2% lower. Perth fell by 36.9%, and Canberra dropped by 9.3%. Apartment demand, particularly the investor-grade stock in Sydney City and inner south as well as Melbourne and inner regions, is likely to continue falling over the coming months, said CoreLogic's analyst Eliza Owen. The risk in these markets is the pile-up of rental listings, which rose in these inner-city markets by about 50% between mid-March and late May. The compressed rental yields that will result from this excess rental supply will deter investment activity. 100%. I don't understand I guess if you're thinking from a long-term perspective and you think that we will eventually rebound, or if you're hoping that we'll get a V-shaped recovery and everything will shoot up, maybe now would be the time to invest in some property. But if I'd hope you'd have to wait until these lockdowns were restricted, until all these interventions in the market were removed. Because as we're seeing here, there's room for it to go down further. People need to feel the pain a little bit more. What do you think, everyone? What do you think? Are you rushing out to jump on an apartment, or are you sitting back and waiting? As always, please let me know your thoughts and opinions in the comments below. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. Simply interacting with the channel, commenting, liking, sharing helps the channel grow. It's fantastic. You can join the channel on YouTube or Patreon for a small monthly fee. You can use our affiliate links at Amazon or eBay or Independent Reserve and Kucoin. You can buy a merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Thanks, everyone. Have a great day. I'll see you next time.